Hi, I'm Phil Grande, philsgang.com. Listen to what Fisher said, the former Fed governor.
We front-loaded at the Federal Reserve an enormous rally in order to accomplish a wealth effect.
That's right. Did you hear that? They took the stock market, front-loaded it, ran it 200%, so we ended up not only with a fake stock market, but fake GDP, fake money, fake jobs, fake prices, fake everything. But we took advantage of that, and we're going to take advantage again. That's why I told my gang in May to short the market. On 5/29, that's May 29th, I'm telling you to short the stock market. And we were right. And the market went down over 11%. That's why you got to join my gang and learn how to short stocks just as much as buying them. Learn how to short with me, Phil Grande at philsgang.com.
Go to philsgang.com or give us a call at 877-600-4264.
Hi, I'm Phil Grande at philsgang.com. You know, many people left the stock market after the crash, and here's why.
Responsibility begins and ends with our partners and our shareholders, and that's it.
And that's still going on. That's your planner. They don't represent you. They represent themselves, your money manager. But you have to make a change. You can't change them. You make the change. Join my gang, philsgang.com, so that we can take care of you. philsgang.com.
Go to philsgang.com or give us a call at 877-600-4264.
Hi, I'm Phil Grande at philsgang.com. You know, it's been 7 years now since Obama ordered his Fed chairman to lower the savings rate from 5% to less than 0.25%. With the false narrative, it would spur economic growth and jobs. Everyone would have an opportunity in this economy. That's what he said. But what it spurred was a front-loading of the biggest fake, unsustainable stock market rally of 200%. That's what it spurred. Now, most people did not participate in that rally because people got out of their 401k in 2009. And they said, just get me out. I want nothing but fixed income. And they got killed because with low interest rates, fixed incomes get murdered. You got to know what you're doing. If you're going to really retire, you got to be associated with the stock market. That's why you come to philsgang.com. That's philsgang.com.
Go to philsgang.com or give us a call at 877-600-4264.
Hi, I'm Phil Grande of philsgang.com. You know, everybody, the hot stocks Apple or Google, whatever it is, it doesn't matter. What people don't understand is every stock is the same. If the institutions buy it, it goes up. If they don't, it goes down. It doesn't matter the name. That's why we use charts to identify money in, money out. Join my gang, philsgang.com.
Go to philsgang.com or give us a call at 877-600-4264.
Hi, I'm Phil Grande, philsgang.com. Everybody was asking me, how did I know to short Ford when it was November? And it was when Aunt B was telling us everything was fine. Well, what people didn't know is Aunt B was lying to us. Because when she was raising the rates, machinery sales were down 5.6%, computers were down 8.7%, communication equipment sales down 21%. I took a look at our chart and I saw that institutions were pulling money out of Ford. So we said, let's short Ford. And we did that in November, on November 10th, because my charts told me there was a big sell signal, and we took advantage of it. And you know that stock Ford has now dropped 17%. That's the return my gang has now, 17%. Don't follow any of the jibber-jabber from CNBC or the Fed. Follow me, philsgang.com.
Go to philsgang.com or give us a call at 877-600-4264.
Hi, I'm Phil Grande of philsgang.com. I want to extend an invitation to 85 people. That's right, the first 85 people can come to my live shorting webinar. I'm going to hold it on February 13th, 1 to 3 p.m. It's only $70, and it's archived for 2 weeks in case you can't make it. Learn how to sell short. Sign up now for my live shorting webinar, February 13th. See you on the chart.
Go to philsgang.com or give us a call at 877-600-4264.
They just told us right away that we're going to house you, we're going to feed you, and every single one of his medical bills is just all taken care of.
Saber que el tratamiento es completamente gratis nos quita una preocupación de encima.
We have phenomenal research, outstanding clinical care, and the generosity of public, which allow us to treat patients regardless of what it takes. And that's what makes St. Jude so magical.
At St. Jude Children's Research Hospital, families never receive a bill for treatment, travel, housing, or food, because the only thing a family should worry about is helping their child live.
Doctors send us the toughest cases to be treated at St. Jude, and our patients come from all over the world.
When we come here, they told me, don't worry, everything's been taken care of.
We could never repay St. Jude for what they've given us.
Because of you.
Gracias a ti.
Because of you.
There is St. Jude.
Be sure to watch the Phil's Gang Show with Phil Grande, weekdays at 3 p.m. Eastern Standard Time on various devices like smartphones, tablets, your computer, and more. Get free access to the Phil's Gang Show right in your hands at home or on the go. Simply go to philsgang.com. That's philsgang.com and click on the Listen Live link. And we'll see you on the charts.
The stocks discussed on Phil's Gang are not in any way a recommendation or solicitation to buy, sell, or hold. If considering acting on information presented, we first recommend you seek out a competent, licensed professional for advice. Get ready for the radio show that tells you what Wall Street doesn't want you to know.
Oh, I'm a money magnet. Money coming to me. Money sets me free. I'm a money magnet. Money's coming to me.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Radio Network. With your host, Phil Grande.
Hi, I'm Phil Grande of philsgang.com. I want to extend an invitation to 85 people. That's right, the first 85 people can come to my live shorting webinar. I'm going to hold it on February 13th, 1 to 3 p.m. It's only $70, and it's archived for 2 weeks in case you can't make it. Learn how to sell short. Sign up now for my live shorting webinar, February 13th. See you on the chart.
Go to philsgang.com or give us a call at 877-600-4264.
And you can go to my site right now, philsgang.com, sign up for my weekend, for the webinar this Saturday. It's going to be a great webinar. You need to learn how to short. You really do. I mean, look at the market. The market continues to drop. And we're going to continue to have these markets not only drop, we're going to continue to have these bubbles. See, people think we have the, they call it the housing bubble, for example. It's not a housing bubble. They want you to think it's a housing bubble, but it's not. I mean, that's what our owners, the Federal Reserve, the banksters, really want you to think that it was a housing bubble. No, they created a debt bubble. That's a big difference. So they can get the stock market to go up. So the 5 percentile could make a lot of money. But with these bubbles come inflation, come deflation. And the deflation is always in these bubbles. And the way they stop the deflation is by printing and printing and printing money and just keep shoving it right back into the stock market. They use these bubbles to create these magnificent rallies. Same with the dot-com bubble. The dot-com bubble, again, when they did the dot-coms, or they came up with all the tech and all the stuff that they were doing back then, they print the money. So yes, they can give it to companies like Microsoft and all those companies back then to do what they wanted. Here with the housing, same thing. They created all this money, printed it so they could give all this money so people go out and buy these houses. But that wasn't the real reason. When you keep printing money for the debt, to keep building debt, and that's all you're doing, building debt for these people, you're also creating extra money, that printing of extra money. And it's that extra money, that's the real reason that goes into the stock market, get these fantastic rallies. But at some point, you always hit the deflation. And when you hit the deflation, these rallies, like a housing market, people aren't going to buy anymore. When they don't buy anymore, the deflation comes in. Prices go down and everything drops. So you've got to learn how to work both sides of the market. Most people don't understand this whole market. They don't understand these bubbles. We're going to have bubbles the rest of our life. As soon as they took our $50,000 a year jobs from us and they put them overseas and gave us $28,000, how you got to create an economy. How can you create an economy when you shift $50,000 jobs overseas and take back $28,000? How are you going to create an economy? It's hard. When we grew up, there was no such thing as a debt bubble, as a housing bubble. We never heard those things. Matter of fact, when you bought a stock, when we were kids, our fathers or grandmothers, they held on to the stock for 20, 30 years. All you ever heard was buy and hold, buy and hold, buy and hold, because there was no debt bubble. There was no dot-com bubble, no housing bubble, no QE bubble. And that's where the phony rallies come from. They start with these debt bubbles. So once we shifted our $50,000 jobs overseas, replaced them with $28,000, our owners, the Federal Reserve, the banksters, had to come up with a way to make sure our economy wouldn't collapse. With our average job at $28,000, they don't have any money to buy stuff. The economy would collapse. Or worse, there'd be a revolution. They were really worried about a revolution. So they created a fake wealth effect, making people think their standard of living didn't drop with their wages. Really, that's what they did. Take the housing. It was really neat what they did. If you lived in a 1,500 square foot house, you paid $600 a month payment, and they would move you up to a 3,000 square foot house with a $300 payment or less. Can you imagine? So when you lost your $50,000 job, now making $28,000, you could move up from a 1,500 square foot house that you're making $600 a month payment. You could move into a 3,000 square foot house at half that payment. That's what they did. They did it by easing credit. No more did you need a 745 credit score, and you didn't need 20 or 30% down payment. They dropped the credit requirement to a credit score of 475. The down payment to 10% or less, even 3.5% if you went to FHA. Oh, and that $600 payment to $300, if that $300 was still a little too much for you, then pick your own payment. You pick the payment. You could pick any payment you want. So you'd have enough money, enough room to go get that shiny new $30,000 SUV. And park right in front of your new 3,500 square foot home. But you're making less than that you made less than you ever made before. This is what they did. So people, their standard of living improved. They thought it did, on less income. The American dream was alive, so they thought. They didn't realize they were living a nightmare inside a debt bubble. All they heard is, oh, well, there's a housing bubble. No, it's debt. And they were being duped. In fact, they even increased the amount of reality TV shows. They doubled the amount of sports channels just so people wouldn't think about what happened to them, that they were duped by the politicians, by the banksters. They were duped. Wall Street. See, the problem with these debt bubbles, the Fed prints more money than for the housing debt. So all these people were buying houses. I mean, it was incredible, remember? But the Fed kept printing money, kept dropping the interest rate, kept dropping your credit score you needed for a credit score. The credit got so easy, it was incredible. But they kept printing and printing money. But here's what people didn't realize. Here's what the scam, here was the Ponzi scheme. They were printing, every time you have a debt bubble and you're printing the money for people to buy homes, like in the housing con bubble, They were printing more money so to speculate in stocks. That's right. The idea wasn't to let people have housing. That wasn't the idea. The idea was that was to mask what they're really doing. When you print money, they print more money to speculate in the stocks of these companies that build the homes, like Toll Brothers, the companies that built the air conditioning of these homes, the piping, the asphalt, the lumber. So what they did is they made you think this is, oh, we're going to help the people. We're going to get them in housing. No. What they're doing behind the scenes is creating a fake stock market rally with all this printing of money to create a fake economy because people are only making $28,000. They weren't making $50,000 anymore. So not only did you have the housing debt bubble growing and expanding, you had a stock market bubble growing and expanding. And we'll talk more about this when we get back and why you need to come to my webinar this Saturday. It's about 3/4 sold out now. Make sure you sign up.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
Hi, I'm Phil Grande, Phil's
Welcome back to the Phil's Gang Show. This segment is brought to you by philsgang.com.
And welcome back to the Phil's Gang. We're talking about the markets, the bubbles, and why do we have these crashes? Why you can't buy stocks and just hold forever like you did with your father and your grandfather. Those days are over. Ever since we shipped our $50,000 jobs overseas, brought back $28,000 jobs, we can't do it. We have to create an economy now. We have to always create fake economies because we don't have that money to drive stocks up, to drive the market up. So you got to drive the market. You can't drive the stock market up where you can buy and hold when people are making $28,000. There's not enough money after they pay their taxes and their bills to go and buy stuff. There's not enough money for investment. Companies aren't going to invest. You think companies are, it's amazing how they keep telling companies are just greedy. They're not investing anymore. Yes, we know companies are greedy, but they'll invest if there's a good environment. They'll invest if there's a good economy. Of course they want to invest. So when we keep hearing of like this socialist Bernie Sanders, these evil corporations, if you have a good economy, evil or not, they're going to invest. They're going to take their profits and reinvest it. But they don't invest because they don't want to invest in the economy. They rather invest in themselves by buying their own shares back, and that pushes the stock market up much further than it should go. Look, debt bubbles, when you say you're selling people homes during that whole period, houses, no, you're not. When someone's making $28,000, they're not buying a home, they're buying a debt. When they buy a car and now they're loaning people cars for 10 years, 7 years, they're not buying a car, they're buying debt. But we have no choice to create these stock market bubbles, which are economy bubbles, because people are only making $28,000 a year on average. That's right. Look it up. I'm not making it up. So the problems you have with these debt bubbles is the idea we think, okay, we're going to create the dot-com and we're going to print all this money and help everybody become a Microsoft and all the things they did back then. That wasn't the purpose behind it. Same with our housing. You think when Bush started all this housing and give everybody easy credit and they could pick out their own payments, you think that was there so they could get into a house? You really believe that? They were selling houses to people they knew couldn't make the payments. Look at Bank of America just got a fine for nothing, $5 billion, big deal. $5 billion fine because they're selling all the mortgages, the subprime mortgages to investors that they knew were no good. So they got nailed $5 billion. Everybody knew that people could not afford houses they were selling to them. Everybody knew it was going to blow up. That if you take a person and he drops from $50,000 down to $28,000, he's living in 1,500 square feet, he's making $600 a month payment. Now you tell him, I can put you in a 3,000 square foot house, and you can, instead of $600 a month, you can pay $300. And if that's too much, you can pick your own payment. You really think they said, oh, this is a good idea? The idea was for the 5 percentile to make a lot of money. To make a lot of money. So what they do is with a bubble, they print and print and print to give people all this money. They don't care if they can afford the house or not. They don't care. It's a scam because they wanted to create and inflate a bubble, a stock market bubble. That's where the money was going to be made. So they create a bubble for housing to really create a stock market bubble, and they print that extra money. They give it to the hedge funds. They give it to companies to buy their own stock. And all of a sudden, you got a 200% stock market rather that's totally phony. But here's what happens. As the stock market goes up, there's deflation. When you create a debt bubble, whether it's a housing bubble or you're creating a debt bubble for housing or debt bubble for dot-coms or whatever, with debt bubbles comes automatically deflation and inflation. So when stocks are going up and they deflate, what's the first thing they did? They printed more money. QE1, QE2, the twist, QE3, to shove $3.3 trillion into the stock, keep that bubble going up. Keep that bubble going up. So every time you create any kind of debt bubble, how is it? Cars. There's a big debt bubble. College student debt bubble. It's all just like the housing to create money for people who invest and the people who are building the homes and so forth. But here's the real problem. So you look and think, wow, what a great economy we got. Look at these people, all got new homes. They're only making 28 grand. But with that comes deflation. That's automatic too. Soon, a bubble like the housing, when gasoline hit and was going up towards $5, people were buying homes that shouldn't be buying homes. They couldn't afford them. When gasoline hit $5, people no more could buy a home. So then prices went down. They deflated. And when prices deflated, and everybody started to foreclose, and people lost their jobs, the economy went down. But the rich, the 5%, they were out of the stock market because it was really created to make wealth for the 5%. And not only did they get out of the market, now everybody's losing their houses, they turn around and short the market. What I want to show you, because every one of these bubbles, they always burst. There's always the inflation that creates the stock market to go up, and then soon there's going to be the deflation that hits these bubbles. And you got to know how to play the downside of these bubbles. And that's what we do here at Phil's Gang. Look, we just take our 5 stocks. Intel, we had a 17% return. Schlumberger, 23%. Goldman Sachs, 21%. IBM, 13%. Caterpillar, 18%. Now, these are the returns. Now, like I say to you, I'm not saying to you every gang member made every bit of that. What I'm saying to you, all of our gang members identified when the entry level. Now, where they got in was up to them, but they identified it was time. The institutions were taking the money out. The stock was going to start going down. Now, if they wanted to get in earlier or later, that was up to them. But the point is to learn that when these bubbles occur, and they keep making these, and they're going to keep more. You think when this crashes, and we're going to crash, we're going to go down to 6,000 on the Dow. Believe me, they're going to start another bubble, another debt bubble. It may be the racetrack debt bubble. Everybody's going to invest in racetracks. Who knows? We'll be right back. 28 past the hour here on Phil's Gang.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
Hi, I'm Phil Grande.
Amen. Take me to church, I worship like a dog at the shrine of your light. I'll tell you my sins and you can show.
Welcome back to Phil's Gang Radio Show. For more information, simply go to philsgang.com. Now, here's Phil.
Take me to church.
And welcome back to Phil's Gang. Okay. Yesterday we were talking about Jeb Bush and how terrible I thought he was to drag his poor mother out in 30 below zero weather and for her to go out and make speeches like this speech right here.
Think there's room for another Bush in the White House?
I think this is a great American country, great country. And if we can't find more than 2 or 3 families to run for high office, that's silly, because there are great governors and great eligible people to run.
90 years old. Doesn't she sound tired, exhausted? Well, of course, she's pushing her stroller around. And they put her walker, and they put chains on. Here, listen. This is, she came out. Listen to her. She's pushing her little walker, and the chains are on it, and the wheels, and wind's blowing. She is leaving. Oh, poor lady. Oh my God. Yep. Thank God she's got the chains. I can't handle that anymore. It's unbelievable. Bring your mother out at 90 years old. Oh my God. Kasich had something to say though about Sanders. Listen to this.
I am for Bernie being president of Ben and Jerry's, and and as a result of that, I want them to give us free ice cream. I mean, if we can get free everything, what about not free ice cream? Now, look, here's the thing. You know what? I'm an independent guy. Nobody tells me what to do, but I'm not way out here. I mean, Bernie's the socialist. That ain't going to happen. I mean, it's just not going to happen.
Look at $70 billion would it cost us for free college. There's 6,455,000 more students with bachelor's degrees today than jobs available for them. Give me a break. What are you, nuts? I mean, it's no shock that, hey, tax the rich Bernie Sanders has captured all these kids. You see them, how young they are? Of course he's captured their hearts and their minds, these college-age kids, these voters. They're taught the rich has an obligation to support the poor. They're taught by these professors that the rich has an obligation to support the poor, to embrace class warfare. They're taught corporations are evil. They're taught that life is unfair. There's no hope for them, no hope to succeed, except through government handouts. It's the professors. We have more socialist professors ever than before. It's unbelievable. The Communist Manifesto still ranks among the 3 most frequently assigned texts at American universities. Karl Marx is the most assigned economist in U.S. college classes. 31 of our largest universities across this nation found the subject of capitalism is often ignored, or they teach it in some form of a perspective other than objective economics. This is unbelievable. Now, after we had the leftist and Marxist revolution, once they were defeated by the unions, then we had the Americans. They finally rejected communism. So the poor left, the poor needed something. They needed a new power base. They couldn't get it out of the unions because the unions beat these Marxists. So what did they do? They found their power base in these universities. And that's why you see these kids all over Bernie Sanders. It's terrible. So I hope to God he doesn't go anywhere. And also we need, it's so important, we need that whoever the next president, for God's sakes, he's got to fix Washington. He's got to fix Wall Street. The market, I don't care if he fixes. Because think about it. When you create these fake debt bubbles. We already had the dot-com debt bubble, which the stock market went up tremendous. We also had the housing debt bubble. Well, you know that. Terrific stock market. And now we have the QE bubble, the debt bubble. Remember, everything was green and energy, and now we have the QE debt bubble. But all these bubbles, we have no choice but to have them because we won't have an economy. You can't build an economy on $28,000 a year jobs. You can't. So what they have to do is come up with some fake bubble, some asset class, so they can take that asset class, put it out, and say, "Hey, we're helping you, the people. Now your standard of living is going to be the same. Your standard of living is going to be the same on $28,000 as it was $50,000. You're not going to have to put 10% down, 20%, 30%, no more. You can put down nothing. You can take that $600 payment. You pick your own payment." I mean, how wonderful. Everybody thought, wow, this is unbelievable. I'm now living in a 3,000 square foot house, not the 1,500, and my payments are cut in half. Isn't this America? Isn't this a beautiful thing? But what they didn't know what was going on underneath it, the real purpose was not to provide people homes. They knew they knew the bubble was going to burst in these homes. They knew that 10 million homes were going to go in foreclosure, and the very people who are getting wealthy on the stock market bubble on the other side that nobody's thinking about, where they're printing this extra money to push into the stock market, when the depreciation finally hit and the prices went down and 10 million people lost their homes, $8 trillion was wiped out. It was the same people, the 5 percentile, who went and bought the homes and rented them. So you've got to know how to make money on both sides, because these bubbles are with us forever in some way we get these jobs back. And how are we going to get these jobs back? I don't know. So if you think that you can go in a 401k and just make money by sitting there, first of all, with 2% fees that wipe out half your money, if you think you could just sit there, you have someone manage your money, and you're going to retire nicely, check the employment numbers. What do we find out about our employment numbers? Half of these jobs were taken up by people who were retired or near retired. They couldn't get rid of their jobs to retire. They just couldn't. They didn't make enough money. And the people who were in retirement were coming out and taking these jobs, almost half the jobs. So to create wealth, we're going to have these bubbles forever. The new bubble is going to start. This one's ready to crash. This one, I told you, started in July. So please be with me when it crashes. When this goes down to 6,000 or it goes down, I don't care if it goes down to 8,000. Please create that wealth. You got to create wealth now, not only when they go up, but when they go down. And I want to give you that opportunity. I'm extending to you 85, but we don't have that many left. We don't have that many openings left. It'll be this Saturday. It's archived for 2 weeks. It's only $70. It's from 1 to 3 o'clock. 2 straight hours of explaining shorting. Most people don't even know what shorting is. All they hear, oh, it's dangerous, it's dangerous. It's no more dangerous than going long. You got to have shorting with these bubbles. It's crazy. What are you going to do? How can you sit there and say, I'm going to buy a stock and hold it forever and I get good dividends? When the stock market is going up, it's a byproduct of what bubble they're creating at the time. Tech, housing, green. The next bubble could be, I don't know, race cars or racetracks. Who knows what the next bubble is going to be? But they need something to put up there, some asset up there, put up there to say, oh, here's what we're doing, printing all this money so people can benefit on this asset. When the 5 percentile got their own game going on here, with the stock market continue to go up. And every time the market came down, they were there to print more money. And every time it depreciated, they went in and put more money to push that market up 200%. And that's how they create an economy. They got to create an economy. Because you can't, if they didn't do that, and 95% of those people in this country are making 28 grand, where would we be? Join my gang. Also, come to my webinar. You don't have to be a gang member. Sign up now. Only a few seats left.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
Hi, I'm Phil Grande at philsgang.com, and I have a special invitation for you. That's right. Saturday, February 13th, I'm going to extend to 85 people, the first 85 people, to attend my live shorting webinar. That's February 13th, 1 p.m. to 3 p.m. Eastern. And if you can't make it, it's archived for 2 weeks. It's only going to be $70. And this is where you're going to learn how to sell stocks short. So you can make money as stocks go down, as stock markets sell off. You need to know how to sell short. So attend my live shorting webinar. That's Saturday, February 13th, 1 to 3 p.m. Eastern Time. Only $70. That's it, $70. And you're going to learn how to short. And as I said, if you can't make it, it's archived for 2 weeks. And the 2 weeks is terrific because you can keep looking at it, share it with your family. It's a great opportunity. Again, only $70. philsgang.com.
Go to philsgang.com or give us a call at 87. Welcome back to the Phil's Gang Radio Show. Want to know more about Phil's Gang? Go to philsgang.com or give us a call at 877-600-GANG. That's 877-600-4264.
Right. I've been talking about a bubble for a while, so let's see. I hope I'm wrong, but I think we're in a big, fat, juicy bubble.
It's Donald Trump. I've talked to him about it several times when I've met with him, and I'm telling you, don't do anything about them. They're too good, and I mean that because you can't stop the bubble. The only way, what you got to do is start creating $58,000 jobs again. They have no choice. Just like these kids, Bernie Sanders, right? He's got these kids going crazy. Corporations are lousy. They're greedy, bad people. No, they're not. A corporation has a duty, okay, the CEO, to grow the assets of that company. Now, they're not going to reinvest their money. When they take a guy, he's making $50,000, and they ship his job overseas, somebody over there can do it for $2. Okay? So, or let's say $2,000 a year. So that $48,000 in profit comes back to that company. Don't you think they'd like to take that $48,000 and grow the company? He can even make more money, the CEO. But they don't grow the company because there's not an environment out there to grow the company. How can you grow? Why would you take money if you own a business and reinvest it in an economy you have no confidence in? When you have an administration who's a socialist, just like Bernie Sanders, who hates small businesses, whose solution to this entire recovery would have been to create an environment for small businesses to succeed, to hire people. It's small businesses that create the $50,000 jobs, $60,000 jobs, $70,000. It's the small businesses. Instead, in creating an environment, he killed small businesses. 86,000 new regulations. Then he killed the banks that financed them. That was the community banks. He put so many regulations on community banks to force them so that they had to sell to the 5 big banks who own assets equivalent to 2/3 of our GDP, or 2/3 of our GDP. That's 2/3 of $9 trillion. These 5 banks who issue half of the mortgages of this country, 3/4 of all the credit cards. The way it works, the Federal Reserve, the banksters, our owners, will create a fake asset bubble like housing or whatever it is. The next one, who knows what it's going to be. They print the money and they give the money to the banks to give to the companies to buy back their own stocks. They give the money to the hedge funds to go in and start speculating on stocks. They need the banks. Without the banks, the market can't go up. They bail the banks out. They're always going to bail the banks out. Why do you think they don't put them in jail? Because it's part of this process of this bubble making. We are a bubble economy, so you got to learn how to invest in a bubble economy. The best part of the bubble economy is on the way back down. And you're always going to come back down. My God, just go look on a chart. Have you ever seen bubbles like this? No, this all started back in the dot-coms. Because remember what happened with the dot-com? We lost all of our manufacturing jobs, all our smoke jobs gone. And what they did is they started to create, but it took a long time. Everybody who lost their job in the manufacturing industry were trying to be absorbed by this new technology, computers and so forth and software, but it took time. So they had to create an economy. So what did they do? They said, let's now take the dot-com. We'll put it out there. Is this why we're printing all the money? We're printing all this money to help Microsoft, to help all these companies, to provide them money to grow. But what we're not going to let people know we're really doing it. So while we print all that money for Microsoft and all these companies starting, because when you print money for an asset, you always are printing extra money for a stock market. And that's what they did. So they printed extra money for a stock market, and they keep running the stock market up. And with the stock market running up, every time deflation hit it, started to come back down, there was no earnings. There's no earnings in these bubbles. Do you think our stock market went up 200% because of earnings? Look at our earnings. They stink. Our GDP's been 2% since 2009. Look at our earnings. Our annual look from the 2014 to 2015, our GDP, our economic growth is 2%, but they tell us we created 14 million jobs. Well, if you created 14 million jobs and you reduced your unemployment from 10% down to 4.9%, how could you have a 2% economic growth? You should be at 4 or 5%. So the first deal was .com. So they grew. While everybody was looking at all these companies being built and new technology and all, nobody was realizing the stock market was going through the roof. And every time it was depreciated, they print more money, and the banks would give the money to the banks, and the banks would give the money to the 5 percentile, whether they're corporations or individuals, and they made a hell of a lot of money. But then, in all debt bubbles, you get deflation. At some point, they can't go up anymore. People stop buying for one reason or another, like they did with the .com. Nobody else was buying. There was so much fiber optic, they almost started to chop it up and use it as a confetti. So nobody was buying. First thing happens is deflation. Prices go down. Jobs get lost. You go into recession. Then they said, then we had 911. They said, let's create another one. That worked out beautiful. By accident, it worked out beautiful. The rich were getting richer. The 5 percentile were getting richer. This was great. So now they said, hey, let's do the same thing with housing. We'll tell everybody we're here to help them with housing. And we'll sell houses to anybody. We don't care because we know the housing market will crash. But we'll wait till we get our money out first. So the housing market for 8 years keeps going up, 6 years keeps going up and up and up and up, selling to anybody that could breathe. You don't think that they knew? You don't think they knew the housing market was going to crash? They didn't care because the real money was being made in the stock market. And by the time the stock market, the deflation hit, prices went down, jobs got lost, 10 million homes went down the toilet. The 5 percentile made all their money. They got out again. And then guess what? They turned around and shorted the market again. Now they decided, let's start the QE bubble. Let's start all this green energy. We'll use all that green energy. We're going to do everything with green energy. Green cars, green everything. So they started the QE bubble. Same thing. Now we're at the peak again, just like we're at the peak of the .com, just like we're at the peak of the housing com. Now we're deflation's hitting, where people aren't buying stocks anymore. I told you in July they weren't buying stocks anymore. I said in July, I've never seen institutions pull out so much money. And I said it's the beginning of the stock market crash. This is the third one I picked. Third one I've been involved in. Third one I nailed it. And I said to my gang, mark this date down July. This is the beginning of the crash. Let's start shorting. So if you think you're going to retire without knowing if you're going to give your money to somebody that just buys stocks for you in a 401k with 2% fees, that's going to cost you 65% of your money anyways, how the hell are you going to retire? How? 2% wipes out 65% of your retirement money. So I will reach out to you like I do my gang every day. All I ask you is you please, if you're making money, take care of St. Jude. We need 1.7 million every day to open the doors. That's all I ask. So this Saturday, I invited 85 people. I don't know how many we got left right now. I'm sure not many. Why don't you invest $70 in yourself? $70. Learn the other side of this market. Because at some point, you got to say to yourself, he's got to be right. He's got to be right. Because if people are making $28,000 instead of $50,000, how can we have an economy grow and these stock markets go up 200%? Where are the earnings coming from? Remember this, stocks are going up 7 times faster than profits. How the hell could that happen? Don't you have to sell something? No more. These are bubbles. So you're going to create wealth, not being in a mutual fund. If you want to stay it, fine. If you want to stay in a mutual fund, fine. But there's an alternative here. I'm reaching out to you. Doing a special on Saturday, 2 hours, $70 webinar. You can do it. It's archived for 2 weeks. If you can't make it, do it from the comfort of your home. You don't have to be a gang member. If you want to join the gang, that's great too. But at least let me introduce you to a stock market, how to utilize a market when we're going to be in these bubbles the rest of our lives until we get $50,000 jobs back here. They have no choice but to create bubbles. They have to. Come to my site, philsgang.com. Sign up for my webinar for Saturday.
You You have been listening to Phil's Gang with your host, Phil Grande, on the Off the Wall Street Radio Network. Off the Wall Street Radio Network. Remember to visit Phil's website at philsgang.com. That's philsgang.com. Or call the office, 877-600-4264. That's 877-600-4264.
It's up to me.